Hello everyone, this is Mike Nathan from Feedseye. I'm very happy to be talking about Money Mules today with Ayelet Biger-Levin. And so I'm going to ask the first question. Ayelet, how did you fall into fraud? Because nobody seems to actually choose it as a profession.
Sure. So I'll give you a little bit of my background. So I've been in the fraud fighting space for many, many years. And even if I tried to leave, I never managed because I always say it's kind of like the Matrix where you swallow the blue pill and then you know what you know and you can never leave it. You can never forget. So I've been in this space for many years and mostly working with financial institutions, by providing technology solutions to fight fraud in account opening, account takeover, and leveraging tools and technology to help them in various ways. And over time, following the evolution of MOs and modes of operation, in my last role, while investigating kind of trends and fraud, I realized that the KPIs of financial institutions always focus on low false positives, high detection rates, and all the KPIs around really detecting data and stats. And I felt like there needs to be more focus on victims, on the not only the financial implications for victims, but also the emotional. When they go through emotional manipulation, be it through account takeover, so phishing or malware, something that they did to allow the criminals to take over their account, all the way to scams, which is a very much growing attack vector that's happening. So I started a journey and created a podcast called ScamRangers and a website called ScamRanger AI. And my goal is to help and prevent the emotional manipulation as well as the financial manipulation, and that's been my focus since.
Yeah, and I think what you've brought up is interesting. And I'm very interested in the psychology, the mens rea, so to speak, of how fraud actually takes place, what makes people actually commit it, or the people who unknowingly, what makes them fall for these ruses that we see. But I'm actually, from building these models, and I'm probably thinking about this more from a bank than a vendor side, actually some of the things that you might not consider, from a vendor side, that's actually really important. And this is kind of going back to behaviors, is like the absence of transactions. The first transfer in is probably the fraud in that situation. And I have a stat that, looking at it in the UK, that 85% of money mules take place within 3 months of our account opening.
Mm-hmm.
So I think there's a lot of breadcrumbs beyond the onboarding controls that you would have that would actually say this is not normal. And then when we go to the recruited sort of mules, and I think these will be, I don't know if I'll make an estimate on the percentage and I'll get your view. I reckon 80–90% of all the mules are probably either recruited or purposely opened. And then we do have the unwitting mules and the victim mules. And I think that's a much, much smaller percentage.
I think you're right on the stat.
Yeah.
And I just want to chime in on the breadcrumbs. I completely agree. It's, as we said, it's a layered approach. It's the new account that's always suspicious. A new account is always higher risk than an account that's been with a financial institution for a while. And also, we've seen cases where the activity before the actual first receiving is higher, not necessarily fund transfers, but actually logging into the account, checking for funds, and just a lot of activity happening there before the actual first incoming transaction happens.
Fully agree. And I remember writing a rule once that you could see from 2 different banks that there's a login from 2 different banks at the same time, one committing the fraud and the other actually receiving the funds from the same device within 10 minutes of each other. So yeah, I fully agree. And you're right on the layered side. There's something I kind of want to seize on. There's a hot topic here in the UK. The trigger event. Now, all the things that we've kind of talked about, and we'll get to financial inclusion. I think that's a logical thing of when we start talking about onboarding controls, and I think that's maybe a consequence that we have to think about. But actually, just say I'm a bank and I've put in place my layered approach, but there's nothing compelling enough for me to block that account. Just say they have the absence of normal types of transactions, but it might be they just don't use their card. It might be there's some weirdness on the account opening. It might be that they have something that requires them to do that, and there's probably a bit of noise that's in there anyway generally. Sometimes people do use copy and paste. It's not something that's necessarily something that's always fraud, but it's a higher predictor. So just say we have a suspicion at this point. For me, the trigger event is that receipt of funds. How do you think banks will have to change to actually understand that thing? Because that is the confirmation of suspicion. £10,000, $10,000 has arrived in this account. That's an actual thing that says something that I thought was suspicious because I wasn't sure. Now I need to act. How do you think things will change in terms of how the banks actually deal with that trigger event?
I think one of the things, and I know this was discussed as part of a holistic approach to this, is slower payments. Maybe we stall the payment and not necessarily have everything processed immediately in some cases where the suspicion is high. And I know that's been discussed in Australia as one of the means to tackle scams in faster payments. And that's one way. And the other one is really the cost of business. It's always been the financial institutions need to balance the user experience with the cost of fraud. The only difference right now with the liability shift is the liability shift, right? It's the fact that they're going to need to pay for it versus the whole reimbursing customers. But that's the same case of account takeover fraud. Do we stop that or do we allow that to happen? It's the cost of doing business. Are we willing to take that cost? And how much is it going to cost us in lower amount of business that will happen?
I still think there's more to be said around that inbound, because at what point do you stop that? Because obviously receiving money is not necessarily anything going out, and a bank could potentially repatriate those funds back to the ascending bank if it was turned out to be fraud. So we're probably talking about freezing accounts, aren't we? As saying, we're not going to let this money mule take the money on or send it anywhere or exit that kind of cash. So that becomes a new control that a bank would need to have in place, that they can put a block on someone's account basically because it's a suspected money mule. So that's change one. And then change two is the dialogue. And I think you talked about this. This is really about, how does Bank A get in touch with Bank B to say, we've received some funds. We think it looks dodgy. It looks like a money mule account. We've frozen it for you. Now we have to find a mechanism to give it back so that you can give it back to the victim in this situation. And I don't know if that messaging and communication across all banks, and especially somewhere as diverse as the US in terms of the financial institutions, that's a big change, isn't it?
It's going to be a huge challenge for the receiving banks to identify that first transaction as suspicious. And what they will need eventually is the sending banks to feed them with intelligence about something odd happened here. There was some situation of potentially account takeover or confirmed fraud that is going to be fed into the receiving banks in order to be able, and everyone is a sending and receiving bank, so they all have shared interest to participate in this intelligence sharing. They'll need to do a lot more of that in order to be able to unfreeze the funds or stop the funds. It's very hard, especially in today's gig economy, where someone can start, doing something that's paying them through instant payments or P2P transfers, and a contractor is coming to my house, and those types of payments are very infrequent potentially and happen suddenly start, and especially in this economic situation where there are a lot of layoffs and people are looking for gigs to be able to pay the bills. So all of that happening with a liability shift is going to be very tricky for financial institutions. And even I would say those behavioral patterns of legitimate users are changing so frequently that distinguishing between that and an illegitimate activity is going to become harder.
And I think you've kind of hit on something here for me when you talk about data sharing, because now I kind of turn to the role of the network. So we have in the UK, we have Vocalink and some others who are doing the rails effectively, because the rails see both sides of the coin. And I know you obviously have some networks in the US as well. Where do they sit in this? Do they take any of the responsibility for this? Because it's their pipes that are effectively passing these messages, and they see the whole network across all the banks. Because the big challenge is, if I put in place a mule strategy to look at my mules, how do I know Bank B is actually doing the same thing? Maybe they don't care so much. Maybe they don't have the capability to do that.
They can definitely play a role, and I think the amount of data that they have is also limited, right? They see maybe two sides of the transaction, but they don't have all the metadata that the sending and receiving bank have in terms of who is the account holder. And when I say who is the account holder, I mean what device do they have, what location, all the intelligence that we can collect about the user who's actually performing that transaction, those networks don't have. But are they in a place where they can facilitate the collaboration? Yeah, I would say potentially they could be the ones doing that. Today, mostly vendors are doing that. And I think that's a little sad. I don't think that the vendors have the ability to facilitate the broad information sharing globally or even locally within a country in a way that's going to mandate all financial institutions to participate. But those formal government, either government supported or government authorized networks are able to play that role. Of course, they'll need the technology and the tools to do that. And if you talk about sharing responsibility, I would say the responsibility is much broader than financial institutions and transactions. The responsibility actually has to go. I call it the scam life cycle for scams, but if we call it like look at the mule life cycle, how are these mules recruited? How are these mules lured into becoming mules? What are the means that they use to do this? If we drive more awareness to, and I know there are some initiatives going on, but they're very sporadic and they're not holistic and not by governments. If we go to universities and colleges and educate or bars and educate people about this thing that it's a mule account and also facilitate the care. Some people don't care. They don't have money. They need extra cash, and they're willing to do that because they don't know the liability and the risk that they're taking in doing that. So I think there are other players here who could play a role and contribute, be it social media, be it telcos that are part of facilitating communication to recruit mules in this scenario. Imagine that a financial institution could get intelligence about the fact that someone was lured into becoming a mule. Wouldn't that be amazing for them to be able to cross-reference that with the actual behavior that's going on and really take that risk indicator into consideration while evaluating the holistic risk of this account? I think that's something that we also need to really think beyond the financial industry. And I know that UK Finance has said that time and time again in their annual reports. It can't be on the financial sector alone to tackle this problem of fraud. It needs to be more holistic and looking at telcos and other facilitators across this ecosystem.
Yeah, I fully agree. And this is a really nice pivot into the kind of the more social side. So there's a couple of things I kind of draw out. It's good that you mentioned UK Finance. They actually ran a campaign called Don't Be a Mule, which I think was a good one. And there's some nice stats also from Europol of some of the mule networks that have been taken down and arrested. So there's, kind of education and fear are probably two very powerful drivers to try and stop people being money mules. It is obviously a criminal thing that can be convicted. People can go to prison for this reason. So there's a few deterrents that are in there. But it's interesting you mentioned social media. I don't know. I use certain social media sites, and sometimes I see ads that come through that 100% of fraud, scams, or money mule recruitment. And these are ads, so they're paid for. And they're making money out of that. And to me, that's I kind of understand. There's this whole argument around social media and verification that there's reasons that some people want to be anonymous. Maybe it's journalists in places that they don't want to be, and they don't want to be able to be pinpointed and load their IDs so that they can have political opinions. I get that. I also understand the logic of saying it's completely unpoliced and there's a lot of bots and there's a lot of creation. I guess I'll kind of think of it from this point of view. I remember talking to a police lady, and she was actually she was saying that in terms of child education for money mules, and remember, any account that you can withdraw money from, cash from, even if it's an ATM only, if you can top it up, you can use that as a money mule account. She said that they've stopped targeting secondary school kids because they've already gone. So she only goes and talks to primary school kids. So just to put that in perspective for an American, that's 11 and under. They don't bother with, the police don't even bother with the ones that are already in secondary school because they've already gone. They've already down that path. And she said one of the kids in the school put his hand up and just said, "I'll just keep the money." That's the attitude. So he's a money mule. say £1,000 comes into his account. The criminal says, you send me 900, you keep 100. He was like, I'll just keep it. I'll keep the lot. And
Wow.
that really struck a chord with me. So I'm kind of curious to kind of sort of see from a social perspective, and then maybe we can ask a question around, your experience of whether you've seen some of these cases in reality. But I'd be interested to think about this whole piece around social media, child education, because I think it is a really important. It's good you pulled out students. That's kind of the obvious one. I think Snapchat and all these different types of the ones that the younger kids actually use is where I would go and target money mules. I have to say, that's if I was going to be a money mule herder.
Funny you mentioned the education. I recently reached out to our local middle school, which is, I guess, secondary school. It's a grade 6, 7, 8. I reached out to the principal and wanted to come in with a colleague of mine and educate the teens around the risks of social media and password and cybersecurity and just being cyber smart online. And it was hard. And he said I have to talk to the IT specialist and took me down this path. And then I went to the elementary school, which is to talk to fifth graders, just like you said. And the principal at the elementary school was very straight. He also said, I have to talk to the technology specialist. And then my colleague said, you're offering them a free product, but it's still a sales cycle. You need to convince them to get in there. So eventually the elementary school principal reached out and we did come and talk to fifth graders. And when we were planning this, I thought, yeah, fifth graders is probably the earliest we go in terms of talking to kids about being cyber smart online. And we curated the content to be appropriate to fifth graders. And we plan to talk to the middle school, the older kids, about, I think one thing that to me, side shift here, but one thing to me that is, I think, most concerning is the topic of sextortion, people being extorted by sharing nudes. And I follow that on Reddit. It's just horrible. And there are cases of suicide and people harming themselves. It really teens that are lured into this. So I'm very passionate about educating generally, but this is kind of my main driver. I want them to know about this risk because if they don't know, the more we normalize these risks and these scams and we reduce the shame of it and then they can take action. That's kind of the gist of it. So anyway, we talked to fifth graders. And we talked about 3 topics. The first one was the concept of data breaches and password protection and multi-factor authentication and why they shouldn't use the same password across multiple applications. And that's number one. The second topic was social media and the risks of social media. And the question we asked them, for example, is what is the risk of talking to a stranger online if you're never going to meet them in real life? And then we opened up the floor. It was very conversational, but just to hear their perspectives and to hear if they know the risks and they know to be cautious and they know they're acting with the mindset of this might be a girl that's my age that I'm talking to, but it also might be, a 30-year-old predator that just tries to get personal information and the impact of giving out your personal information. And the third topic was the concept of if something is too good to be true, it probably is. And we talked about game cheats on Roblox and things like that are appropriate for their age. But yes, we need to instill these concepts very, very young age in order for them to have that critical thinking from the get-go. So when they are reached out to be a mule, they already think about, wait, have that suspicious mindset. And I think we have this whole generation of teens who are now in their 20s and 30s who grew up into social media being just a thing and not just we gave them phones and we gave them keys to the car without teaching them how to drive. And I think now we're seeing the consequences of that in the mule recruitment. And the point of caring, just like you mentioned, that kid said, I'll keep the money. They don't care because they don't understand the implications of the risks on society, on their families, on the ability that they might go to jail, things like that. They haven't dove into that. You asked about my personal experience.
Yes.
With mules. So we actually had a case that happened to us. So we suffered from account takeover. And being a fraud fighter myself, I investigated that, helped my bank investigate that. I'll give the end. We'd left the bank that did reimburse us because it was classic account takeover fraud. So it falls under the regulations here in the US. It took us some time to convince them that it's not us. But we left the bank because of the way they handled the process here. And the fact that I have a background in fraud helped a lot in, I pushed and pushed and pushed until we figured out what happened. And what happened was we had stolen funds from our bank account. We looked at the account and we're like, what's going on? And we traced the money to our babysitter. It was her account that was being used. Now, not to mention, she didn't say our babysitter for long because to date, I don't know what kind of mule she was. That's the reality. I don't know if she knew what she was doing or she didn't know or she was a victim herself. So we find out the stolen funds. We reach out to her and we say, this happened. She had no idea, or at least she said she had no idea. And then we went to the police to report. And I always recommend to everyone, always go to police, always have a report on record. The reason we went to the police is because our bank told us we have to go to the police. So we did. We filed a claim and then, we reported the incident, and then we reached out to her, and so did they, to ask what's going on. And then she said to us that she has two bank accounts. One is her student loan funds account, where she hardly uses that account. And the other one is her regular account that she uses. And she got a check from us once, and she deposited our check into her student loan account, which she hardly uses. And she said she also used that account to buy online on a website that's not necessarily the most secure. I don't know exactly what happened there. And then suddenly when looking at that account, she saw a lot of funds coming in and going out. She hadn't noticed that before, but when she went to take a statement, she suddenly saw all these funds coming in and going out that she said she didn't do. And that is a classic example of one of two things. One is that someone somehow, maybe from accessing that website and providing her financial information, did some account takeover, or she's a victim of phishing. I don't know exactly. But in that scenario, she has an account. She doesn't use it too often, so she doesn't track it too much. So they used her account as a Mule account. And once she cashed a check from us, they also had our bank account details. And then they moved on to us. So that could be one scenario. Scenario number two is that she's an unwitting mule, or she didn't know exactly what she did. We don't know to this date if she was a victim or a very naive mule. But yeah, we're no longer with neither the bank nor the babysitter. And it's just that sense of invasion. And she had to go to the police and report. But I don't know, definitely not the local police, but how much law enforcement is really familiar with those challenges of online fraud.
I know in the UK they've seen stats where something like 80% of all the crime in the UK is now fraud related, but it uses up less than 10% of police resources. So you've got this imbalance because from a law enforcement perspective, they haven't got the capacity to investigate every case. I don't know how much the amount was with the babysitter, but I'm assuming it's in the hundreds of dollars, not in the thousands and tens of thousands. In the thousands, okay.
Not tens of thousands, but thousands,
no,
yeah.
In the thousands. But still, for law enforcement, at what point does it justify it? And I think, I kind of go back to the children. I remember a friend of mine who's a filmmaker interviewing some of the kids in around Stratford in East London, and they were all saying, I want to get into fraud. And it kind of struck me that if you want to keep up with the Joneses, and that's a very English phrase, but it's kind of like keep up with your friends who are wearing the nice trainers, got the nice shoes, that's what matters to you. All the youth centres and local clubs have all been closed down because we're working in a cost of living crisis and the government are pulling back on social funding. What else do you kind of go and do? So in my mind, and I'll bring this to a stat to you that I think is quite interesting, and I am talking 15 years ago, I worked for a bank and I could see that they were losing I used to do the MI reporting, they're losing hundreds of millions every year due to fraud. And then they published a thing where they published the number of convictions that were associated to it. We're talking hundreds of millions of pounds are going out of the system and to fraudsters. And they seemed quite proud at the time, and I just remember being very shocked. Our work with us led to 35 convictions. So if you have 35 convictions versus hundreds of millions of pounds that you could potentially get, that just means as they're making a lot of money, making extreme amount of money. It's low risk from their perspective. In fact, if you are probably under 18, what's the worst that can happen to you? You're not going to go to prison, are you? You're still a minor. So, we're going into a period which has been, of low economic activity. Do you think there will be more money mules because the greed aspect will probably take over, and maybe the fear aspect will also kick in because I'm worried about how I'm going to pay my bills, versus actually I want to get the same trainers as my mate, as the two drivers? Do you see there's a correlation between, and especially now, probably a lot of the COVID stuff is unwound. There's a bunch of people still needing to try and make their money.
I think one of the things that's going to be very tricky is, and that's where education early on can come in, is the fact that when someone is hungry, their values are challenged, right? You can live with your values and want to do good and all that, as long as you have the basic needs. You have shelter, you have, you're kept warm, and you have food. And when those are challenged, then you just do what you need to do to survive. And it's going to unfortunately come to that in some cases as well. You also mentioned law enforcement, and I think they need to get into digital footprints and digital identity and how do we track in. They're definitely starting, but you mentioned only 10% with the rise in, if criminal activity in this realm is over 50% in most countries, and you mentioned 80% in the UK. UK is leading always with everything, with good controls and with sophisticated attacks and the trends and regulatory as well. But it's over 50% now. That's one thing. And then the second thing is changing the KPIs. You talked about the fact that not many people were prosecuted and brought to justice. The KPIs need to change there. It's not going to always be about catching the criminals, especially if they're overseas. It needs to be about stopping the crime. It can't always be about catching the criminals.
Yeah, I kind of agree. I think there are a few other challenges that I think you haven't kind of got into, which I think is, so number one, we've seen in the UK stats, UK Finance published their stats, and they showed the overall scam losses. And if we make the assumption that for every APP scam, there also has to be a money mule at the end of it, the losses from scams went down, and they went down quite a bit actually from the COVID times. And the kind of the attributation is, we had COVID, we had a spike, and now it's returned to normal. But the stat that struck me was that cases were 6% up. So even though scams were 17% down, the value of the scams was 17% down. The number of cases was 6% up. And then having talked to the banks, what we've kind of realised is they're going for volume and at smaller values. So the mule that you talked, which you said was thousands that you discussed with the babysitter, maybe I do 10 of those in the hundreds and I get to the same amount. So I actually think there's kind of this kind of shift. So there's no way a police unit can monitor every transaction that takes place within a financial system. So actually, let's get into this. Who are the mule herders? Who are the guys who actually control these thousands of accounts? But they might be a few degrees separated from the person committing the scam. If I'm a criminal overlord, I would have minions doing stuff. I wouldn't be touching anything. How does law enforcement get to those guys? Because that's what's feeding all of this.
First, I want to go back to the numbers that you mentioned, that UK Finance. And I will say these are numbers of cases reported to financial institutions that fall under the current definitions of APP fraud that banks are liable to reimburse for scams, and do not include cryptocurrency investment scams that are in a sharp rise. And I also want to caveat and say that less than 10% of people even report scams. Now that liability shift is going to happen 100%, supposedly, in 2024, I think the numbers are going to rise because more people are going to report and there will be changes. I don't think scams is really in a decline. Maybe banks in the UK are doing a better job. So banks, other places, the numbers are growing. I can say that in the US, the numbers have grown significantly. Number of reports declined a little bit, but actually the number of money lost to fraud and scams has grown significantly from 6.8 billion reported in 2021 to 10.3 in 2022. So I wouldn't say globally there's a decline in fraud and scams. So how do we catch the head of the Hydra? If I had the answer to that question, I probably would be sitting somewhere in government monitoring. It's tricky, but I think that's something that has to happen, which is, again, collaboration between countries. And my understanding today, Interpol is pretty limited in the amount of collaboration that it can drive, but that's a stronger Interpol with intelligence sharing. And I know there's an organization called the Global Anti-Scam Alliance. I'm on their advisory board, and they are trying to facilitate this collaboration across many sectors, be it law enforcement, be it regulatory and policy, be it vendors, etc. They're trying to drive that global collaboration to be able to really take action that will make a difference. There's this whole supply chain of the people who create the software to do the key logging, and the people who create the phishing kits that are then used by criminals, and the people who sell things on the dark web, and it's really this whole marketplace of fraud tools and solutions that help criminals facilitate the fraud. And the people who are actually getting the money are paying a lot of money for these tools. And many of them are offered software as a service, and they pay a monthly fee. And it just like all legitimate businesses, they run as this very, very sophisticated business. And on YouTube, there are a few people who publish videos about penetrating into a call center in India and releasing cockroaches there and spray bombs to smell bombs to really disrupt the activity of the call center. But that doesn't stop the activity. That same call center comes up a different, next day in a different location on the same street. So it's really about catching those heads, and that is done by understanding the broader landscape. And I'll give you an example of a different type of scam, the pig butchering scam, which is a crypto investment scam, where the operators of these scams are actually people who are trafficked into scamming other people. So people brought from China, they think they're coming for a job, and then they're kidnapped into scamming other people and stealing their money. If you catch them, which you can't because they're sitting behind, barbed wire locations, if you catch them, you do nothing. They are victims themselves. The people who are running these things have very strong connections to the government in Cambodia or other places in Southeast Asia. How do you catch that? Do you place an embargo on Cambodia? That requires governments to collaborate and really put the emphasis on that.
I'm wondering where this goes in terms of, do you think it becomes there'll be a war on fraud? Could that happen, just like there was a war on drugs at different times, where the governments really get focused in on it? Do you think that could actually happen, that it has the same level as funding and disruption and everything that comes through with that? Do you think it goes that way, or do you think it just remains the thing that is a white-collar crime and it's the banks that lose and we all pay for it, so nobody loses, it's not too bad?
So both governments in the UK and Australia have declared a war on fraud. I know the amounts invested in Australia. They devoted $86 million to fight fraud and scams, and the UK also announced a program, 400 fraud fighters that are looking for these patterns to really go and try and catch these criminals. So it's already starting. How effective these programs will be in catching, I don't know, and I hope they will be very effective, but there is focus, and there is a realization by at least these two governments that it needs to happen. Still waiting to hear anything from the US. I think the complexities here are going to take time until something like that happens here.
Even in the UK, I use the UK because I worked in the banks there. Probably say account takeover versus APP fraud, i.e. scams, was probably 50-50. I reckon the loss is around 90 in favour of the APP scams now. And it was, going back to the UK finance numbers, it was last year, I think, for the first time that digital banking fraud, if you include scams, surpassed card fraud. So people are losing more money in the UK via the digital banking channel than they are in cards. And I don't know what it is in the US. It's probably climbing up. It's probably not quite there yet in terms of
lagging behind, but definitely trending that way.
Exactly. If you are defrauded on your credit card, you're pretty assured that unless you were involved in that, you'll get your money back. The credit card companies, they have insurance, you've got chargebacks, you've got all these consumer protections that are in place. However, if I do make a purchase of anything via a faster payment, I have zero. Obviously, we have the contingency reimbursement model in the UK, which is voluntary, which some of the banks have signed up to. In all probability, I will get my money back on the digital scam unless they prove gross negligence, but it's still a whole challenge. It's not the same degree of consumer protection that you have on a credit cards. Do you think the way things that will move, we're just in an evolutionary point where other types of payments are going to get to the point where people have the same confidence as they do when they use a credit card to make a purchase or to transact?
That's a good question. I think if so the situation people are in now, although if you want to activate Zelle, for example, as a foreign P2P payment that I mentioned here in the US, you get a warning. Zelle is a secure money transfer system, blah, blah, blah. Only send money to friends and family never use Zelle for blah, blah. They put all these disclaimers up front. People do expect the same level of liability. They do think that they're going to be reimbursed. That's why consumer groups are so flooded with complaints, because the population or the people expect to be secured by their financial institution. They don't necessarily distinguish between credit cards and other forms of payment. From their perspective, they're used to banks protecting them. So why are they not going to protect them now? They're used to a case where if I didn't do something wrong, I will get my money back. And being scammed is not something that they did wrong in their mind. So, and I agree with that. I think these are criminal rings that use psychology to manipulate people, and we need to protect them. If it's only the banks being liable or other players in this ecosystem, that's a different conversation. But the consumers should not be held liable. I think the challenge now is that people are starting to lose confidence in digital channels and the use of these means for transactions. And if we don't fix that situation, then they're going to go down a path of not trusting digital channels anymore. So what we as an industry need to do is see how we can bring back the trust in safeguarding the communications, the controls, and everything from online social media and digital activity to bank transactions.
Yeah, I fully agree. I'm kind of thinking about an example actually where I kind of tell this story for a second. A friend of mine's mother fell for a courier scam, and that was going into the branch, passing all the checks because she was basically called up and told that there was a fraudster within the branch, and she needed to take her money out, give it to a courier, and he'll take it to a safe location. And she got done for a lot. We're talking tens of thousands of pounds. And in my mind, I was like, well, this contingency reimbursement model doesn't apply because it was in branch. And the bank could have initially said, well, we read a script, and they said, are you doing this for anybody else? And she had the guy on the phone in her ear with the AirPod, coaching her exactly, saying, say it's for your sister. This is the guy he's trying to defraud you right now. It's a bit naive that she fell for it, and I get that, but she's an elderly lady. This is somebody in her mid-70s. This isn't somebody who's young. She's obviously fallen for that fraud, and the bank initially didn't give the money back, but when it went to the financial ombudsman, they got the money back. And to be honest, in the UK, 85% of cases that go to the financial ombudsman rule in favour of the customer. So the people actually do take it through, they'll probably get the money back anyway. But I think goes back to this imbalance, and I think just the point I'm trying to make is around, depending on what channel you get scammed, depends on whether you get your money back. So because it's in a branch, not all the things that we put in place around scams on the digital side do not apply. But it's the same social engineering, the same psychology, the same things that people are falling for, but it's just that I happen to press send on the computer versus going in and doing it in a branch or doing it on the telephone, for example. So I think we definitely need to move towards that to give people faith. And I think people have to be agnostic. It's a payment. It doesn't matter if I'm using a card. It doesn't matter if I'm using Apple Pay. It doesn't matter if I'm using my internet banking. It doesn't matter where I'm walking into branch, where I'm making it, doing it over the telephone. I'm just making that payment. Do you think if there are more protections in place that more people get their money back, more people are going to try it on and do the first party thing of saying I'm the victim, but actually I'm not the victim? The classic, that wasn't me who spent that £10,000 on the credit card. It was somebody else, and I get to keep the goods and I get to keep I get the money back as well. Do you think there'll be a rise if with the liability piece? Do you think people will suddenly start claiming loads of money from that side?
So a few things. First of all, I 100% agree with the branch example. Basically, the criminals will try to get the money regardless of the channel. If they can't succeed online, they'll convince the person to go to the branch. If the person is elderly and doesn't have online banking, but they manage to convince and manipulate the person, then they'll use the branch, they'll use the ATM, they'll use whatever. Courier, which blows my mind. Someone... I've just heard a story about a case of IT help desk fraud where they convince someone that she has a problem on her computer. Someone will come to fix her computer, and then someone will come to pick up the money. So two people were in her house. One of them was on her computer, grabbing her bank account information, obviously. And she let them in because she believed them. They manipulated her into that. So it doesn't have to happen only to people who can access digital means. And I also agree that, we need to drive that trust agnostically across all channels. And that's a big challenge. When it comes to, okay, now liability is there and maybe across all channels, and maybe everyone bought into our point that regardless of the channel, it needs to be reimbursed and we need to protect our customers. Obviously, and same with credit cards. There are people who abuse the system. There are going to be people who abuse the system here as well. I think what will happen, though, more significantly, is that criminals will abuse the system. So now criminals will employ mules who act as legitimate customers, but are kind of creating those chargebacks. Instead of, and they need volumes, right? Because, if you have too many chargebacks, game over for that one. So now they'll, again, need to work in volumes to get a lot of people to do chargebacks. I'm quote unquote chargebacks, right? Scam claims, and trick the system that way. So first party fraud is another type of scheme that banks and financial institutions will need to invest in to be able to detect that.
I agree, and I'll tell you something. When I built a model, and this was going back many years now, it was really interesting because I didn't have enough. If you get into sort of data science, you need a certain number of bads in order to build a stable model, and I didn't have enough bads for the model that I was trying to build. So I was building it just on money mules, and then I actually looked, and the bank had some other definitions. They had first-party fraudsters who are bust-out fraudsters, and they also had certain cases where they'd marked them as first-party fraud if it meets the definition. So it's a credit card that charges off, but they've never paid, never contacted. For me, that's that gets in. If we're talking mens rea, that's the can't pay, won't pay sort of thing. Is it credit risk that they can't pay, or is it fraud that they just never intended to pay? So I managed to triple the number of bads I had by actually using these extra definitions. And then when I started looking at the demographics, and this is like looking geographical areas, some of the device features that you mentioned, all the kind of characteristics of them. Do you know what I noticed? It's the same people who are meeting all of these criteria. So whether I'm a money mule or a first-party fraudster who's trying to, do cash credit cycling to bust out and commit credit card fraud that way, or I'm a money mule, it's the same people doing this. So when we actually built this model, and one of the applications was quite interesting, we also sent it to the challenge team in that bank, and the challenge team are what we're dealing with the claims. So I had scored up the entire population of the bank for mule propensity risk, basically. So not only was it telling us which accounts we think look like mules, but we're also saying which account look like first-party fraudsters. We were also saying which accounts look most likely to do fake fraud claims. It's the same people. And I think that's
The same people that are mules and wow.
If you're a fraudster, you don't just say, I only do this, I only do cards. That's my thing. I only do cards.
I do whatever it takes to make a lot of money.
Exactly right. And that I think was an incredibly powerful kind of way, and it also made my model better because I had 3 times the number of bads. So it worked. I had more use cases for it, and I could see that the profiles and the patterns and all the things that we talked about, the behaviors, were really similar.
I think that's a really strong point, and I think the takeaway is always be creative with ways that you could use the data that you have. There's so much effective data that financial institutions have visibility into. So really take that data to, with everything, all the intelligence that you get from other tools and systems, and look for those patterns. And that's a really good example of that.
Yeah, I kind of always love the idea, if you build a model, now how do we use it? And that's kind of how that often kind of played out. I want to ask you kind of on a topic, and I'm kind of thinking this towards the end. It's about financial inclusion. If we're fraud fighters now and we're working within banks, we're closing millions and millions and hundreds of thousands of accounts across the industry. And it tends to be with mules, it's kind of binary. If you believe the fraud was legitimate, an actual fraud, then it's a mule. If it's wherever that destination account is, whether it's an unwitting mule, whether it's a recruited mule, that's all to be defined later on. We just know there was a fraud, the money went somewhere, it went to a money mule. But we've played it so successfully, now we've got people who can't access the financial system because they've either been misclassified potentially, they were the unwitting mule, or they're socially engineered mule, but they still got their account closed, and other banks don't want to take them on because they don't want to have more liability. Maybe they've had to pay out. They can't go to the neobanks now because the neobanks application controls are much stricter because they don't want to be originating money mules. Could we end up with some more people who are left behind from financial services because of a liability change around money mules?
Yeah, I think that's a really strong point. So there are a few points. I think it needs to be part of the education, the implications of participating in these schemes, especially for those who know what they're doing. They need to understand, and again, if we start 5th grade or colleges, it needs to be part of the implication. And it's not just you might be caught and convicted. This will have long-lasting impact, not just a criminal record, but your access to the banking system. And I think it's hard for a 5th grader to understand that. But if we keep that message going for years, eventually that will stick. Now, I think there should be maybe an ability to appeal, and just like criminals have the ability to pay their dues to society. So I don't think it should be a one and done. You're never going to be ever in the system again. But here are the implications of your actions. And also, I think we should classify it and understand if they're one unwitting mule. So if we go back to the example of my babysitter, assuming that she really didn't know what happened in her account, someone took over her account and she didn't even transfer the funds herself. She just was the host of that activity without knowing because she wasn't active in that account. Should she be banned from the financial systems? Absolutely not. It's someone took over her account supposedly to execute these crimes and funnel the money. It's not her fault. She was a victim of account takeover. So in that case, although she had a mule account, I think it does require that level of scrutiny and investigation and understanding, not just binary stopping the money, yes, but not just binary stopping her from being banked in the future, but really, and I don't think she was excluded because the resolution was that she was a victim herself. And I think the same level of investigation needs to go into that decision making because you're right. People who are vulnerable will be victims of mule schemes.
The thing is, I think there's almost a contradiction. You want to scare people, this is a criminal act, but then when you catch them, you want to also make sure they're not fully excluded from the financial system, which I think is, in itself, if you're going to use fear as a driver to say, don't be greedy, be fearful, basically think about that from an emotional perspective, and you have the stick of saying you'll go to 5 years, and I think in the UK it's something like 5 years that you could go down for being involved in this type of fraud. Because I know someone actually who's operating a business, a small business. He's a mechanic, and he received some fraudulent funds. It was, he was an unwitting mule, but he had all of his stuff frozen across all of his accounts. So if you're a business, that's horrible. You're like, I didn't want to receive this money. It's nothing to do with me. But obviously the bank are like, well, we have to stop that because we have to freeze it. And again, you have this kind of impact. It impacted his business just because he received some money, which he wasn't involved in any way on that side of things. So, you could actually stitch people up, couldn't you? You could kind of say, you're falling out with somebody at work, I'm going to put some money in their account and get them frozen as a money mule. Then they can't do anything on their banking side. You could actually, I'm taking it probably a little bit too far, but there has to be this balance, and the human side comes into it.
So that's a really good example of granularity. Do you freeze all of their accounts and funds, or do you freeze that money that went in and was confirmed? Do you freeze all future activity, or do you add a level of scrutiny? I don't think it should be a binary game, because you're right. Financial exclusion can happen, and the impact on businesses could be very, very significant. And to the point of fear versus forgiveness, I know we deviate back to scams a lot, but I think the emotional equivalencies are similar in luring people in and having people understand the implications. So I just had a conversation on my podcast with a fraud fighter from a credit union in the US, and she talked about how she, as a customer fraud team representative, talks to victims of scams and tries to convince them that they're being scammed right now. They're undergoing a continuous romance scam or something like that. And she tries to ask the questions and to act with empathy. But sometimes she needs to kind of almost slap them in the face with, this is a criminal activity that you're involved in. And if you don't, so that I think fear, it's almost on one hand, all this empathy, and on the other hand, all this tough love. So I think fear and really communicating what they're involved in and showing them the risks is very important as a foundation. But then after the fact, when things happen, and having the empathy and granularity to not punish those who are not intentionally being part of the problem.
And then I kind of compare it to people I know, and I check my account every day. I pay my credit card off as soon as I've done the transaction. I'm that on it, and kind of like, when it comes to money, I'm very, very disciplined about, I know exactly what's coming in, what's coming out. I'll check my bank account 4 or 5 times a day. I mean that. And it's not an OCD thing, I promise. It's just because I'm pretty on it with money. And then you get, is the education piece not like, don't be a fraudster, just be more like Mike, which I can't believe I'm actually saying on a podcast, but in terms of actually saying, just be more on it in terms of, because when I think about people I know, they don't want to look at their bank balance. They don't want to see that. In fact, that's the thing they avoid the most, because it's always makes them feel sad or makes them feel pressured or all these kind of things. So I do wonder how much of it is about financial education beyond just fraud education, of kind of like understanding things, time value of money, all the things that you can understand as somebody who's worked in the industry or done accounting or gone to business school, and you learn all these kind of concepts around how money makes money and all of these kind of things that make you kind of interested in that, versus actually this scare of don't be a fraudster, don't be a mule, even if you don't have any money, just don't do it because you might go to prison. I'm wondering, actually, is being more financially literate and being more on it actually a better defense than necessarily you waving a stick in front of people's face and telling them they'll go to prison?
I think it's critical for people to be financially savvy, and I must admit, I'm not like you. I check my balance a few times, like maybe once a week or a couple times a week,
which is probably normal, by the way.
Even that is more than I used to in the past. I think financial savviness is so important for many reasons, for people to be responsible with their money when they're younger, and they, managing what you're earning and what you're spending, and that level of savviness, and and calculating your future. How much runway do I have? Do I need to get a job? Do I need to get a second job? All those questions will actually prevent a lot of the participation in winning mule activity, because they'll be more financially stable. Another aspect is today's elderly and being tech savvy. So the ability to get up, go outside the house and get to a bank branch to see what's going on. You can't do that 5 times a day, but you can do that online at home. And getting elderly to be financially savvy and independent and manage their own money is also very critical, and will reduce their dependency on external forces to help them, and definitely criminals who are taking advantage of them. So all around, I see only advantages in being savvy. And if you're going to your account and you're sad because your balance is going down, that's just ignoring the problem and not dealing with it. So definitely people should do more of that. At the same time, they need to know that it's a crime. If they don't know that they can be prosecuted and that's a crime, they might still say, okay, why not? Like, do nothing, get money, why not? What is the downside? Why not do that? Not everyone knows that it's a criminal activity or part of criminal activity. They don't know that that money is then used for human trafficking and drug smuggling and other types of crime. So both, I think, education and the reality of the implications is important.
And I kind of I wanted to end this kind of the podcast. We've gone around the houses. It's been really interesting. I think law enforcement's job is to try and find the mule herders. I don't think it's to find all the mules. I think they can be involved in the education piece and everything that comes with that. But I think when you actually said at the beginning a layered approach, we always use that as a vendor and we talk about things being from a layered approach. I actually think this problem is the layer. So all the different layers of a scam, of a money mule, of an account takeover, of the channels, of new banks originating new customers, these are actually the layers. So it's not just a layered fraud defense for a bank that becomes important. It's actually the layers of a problem, which is an industry, a systemic industry problem.
Exactly. The layered approach is twofold. It's meeting the means of operation, the modes of operation, and the different types of threats, but it's also using multiple sources of intelligence and consolidating that together in order to create the holistic picture, just like you described earlier with the models that you've created from the data that you had.
I think what we're moving from is effectively trying to detect actions to trying to detect intent. Then actually all fraud systems become intent engines. And that's actually what we're doing and intent is hard. That's very hard to actually try and discern, because you can be playing poker with someone and you have no idea what they're doing. It might be someone bluffing. They might not be bluffing. How do you use machine learning data and everything to determine intent? And I think that's where we have to go. We have to assume everything is bad and we actually need to look for the good intentions, or we have to assume everything is good and we look for the bad intentions. But that's hard. And I actually think that's probably going to be the future, is every risk engine, every bank is basically trying to determine intent rather than the act.
It's the same with the shift from fraud to scams, right? Or from a classic account takeover fraud to scams, because the fundamental question we were asking when we were looking for account takeover fraud was, are you who you claim to be? Are you the real user or not? Very simple. It's not intent. It's device, location, all these data elements that we collected to see behavior even. Is this a real user or not? Have we seen this behavior? Have we seen this device, etc.? But now with scams, the answer is yes, it is the legitimate user, but what is their intent? Are they acting under coercion? As you said, it's really hard to detect. So we need to look for all these micro behaviors that can say, well, the session is really long. They're on an active call. So maybe they're being guided, but not every active call is illegitimate. Maybe they're talking to their grandmother, and, it's hard. It's super hard to detect. And we are in a new phase, and the same with mule activity. We are in a new phase of much more complex questions that we need to answer. So we need to fine-tune everything that we've learned across all these years in creating tools and processes to detect fraud. And I foresee, at least in the near term, especially when we're talking about liability to receiving banks, the need to grow their operations teams to be able to deploy that level of scrutiny and really find the path to solve this problem.
I always think of authentication as, is this you? This is me. As kind of the, if you think about an SMS OTP, the bank saying, is this you? And is this me? That has to be fully turned on its head when we know it's you, but is it, do you really want to do this? Is basically the question that you're asking.
Right.
It's like, is somebody telling you to do this, or is this free will? Is this off your own free will, or are you being coerced or signed to duress? I think you're right.
And the challenge is that they're coerced into thinking that it's their free will.
Exactly. Which makes it even harder, because you can put them all the challenges in the world. If the fraudster coaches them, that's why I think sometimes the pop-ups that you would have to say that the fraudsters can, as soon as you put a new defense system in that tries to tip off the customer to say, snap out of it, call someone, is this a fraudster? They will literally be coaching the customer to say, this is what you're going to see. Don't worry about that. That's just that's part of the scam.
That's for those cases.
Yeah, that's part of the scam.
I'll give you an example, by the way. We have the gift card scam. It's very, very pervasive here in the US, and I know that in other countries as well. In about a year ago, I went to the store and suddenly I saw these handwritten notes about gift card scams, where the gift cards are. And also, if you go to the point of sale, when I went to buy gift cards, real gift cards for a birthday present, but in the point of sale, they also put a notice saying there are these scams for gift cards. Now, I said, someone convinced a person to leave their house or their office, go to the store, get a gift card. I put all this energy to get here. A little note will not stop me in my tracks. That's not going to happen. So again, it's a really tricky question, and I know a lot of financial institutions are considering those pop-up notifications, as you said, while the transfer is happening. It's going to be a huge disruption to user experience, and I don't know how effective it will be. I'm a big advocate for taking a layered approach, not only in the amount of data that we collect and the different sources of intelligence and the different tools. I'm also for a layered approach if we look at the life cycle. So there's the first reach out, if it's the ad or a text message or a phone call. However, and this goes both for recruiting mules and scams. It's very, very similar in terms of the manipulation that's happening. And then there's the phase of manipulation where they convince someone to do something, if it's being a mule or if it's being scammed. And only then, much later, the actual transaction happens. If it's incoming funds, if it's transferring the money. But that whole part before, there are many solutions that we can put there. If it starts with education, as we mentioned earlier, but then again, can we interject in this manipulation phase?
It's very rare for me to be out of words or out of questions, because I think I like to talk a lot. So I just want to say thank you. That was fantastic, especially as it was about money mules. You have a real depth and a real insight and a really very good way of articulating it. So I just want to say thank you. That was fantastic.
Thank you. I enjoyed the conversation very much and looking forward to chatting soon in the future.